evolve. But when we look into 2022, what do we see as the key topics, the key focus points for True Potential, whether it be...
Where we are very pleased to say that we will be introducing 4 new managers.
And maybe for our viewers, it's probably interesting to know, how did we all get into the industry? How can
hopefully you watch things such as obviously the podcast, which you're watching right now, morning markets. There's so many different ways that we communicate with clients.
Hello and welcome to this week's podcast from True Potential. Today we're having an investment management special where I'm joined with some of my colleagues from the investment management team. Before doing that, I wanted to briefly preview what's coming up next week. Quite a momentous day next week for True Potential and the podcast team. We are going to be recording our 100th episode, so please look out for that and join us for that next week. Ahead of that also, please send in any questions that you have and the team will be more than happy to address those next week. So the 100th episode next week. So turning to this week, an investment management special. I'm joined by 3 of the investment management team from True Potential today. And before we dive into some of the key topics, I'll just ask everybody to introduce themselves, give a little bit of background on what they do within the True Potential investment team. Paul, do we want to start with yourself?
Absolutely. Good morning, everyone. So my name is Paul Durrans, Investment Director. I've been at True Potential for 9 years now. My responsibility is to manage the Growth Aligned solution, which is 5 multi-asset funds that we launched back in May 2018. We've grown to a mass of 2.8 billion today, and that's thanks to the investments that we've had from our clients and from our advisors. So thank you for that support. But really, what do we offer? We offer active management. We take the key themes that we develop in-house and allows us to apply those key themes in a targeted manner. And it's really a cost-effective solution where we're blending active management with passive. So we're investing not a whole of market, so we can go anywhere. So we're using active managers from the likes of Bailey Gifford, Artemis, but also passive solutions from the likes of BlackRock and HSBC. But given the scale that we've got to now, we can really negotiate with these providers on costs and pass those costs on to the clients. But those benefits are passed on to the True Potential portfolio solutions because we sit within that proposition.
And that's something we'll be able to dive into more when we think about 2021 and look forward to 2022 as well.
Yeah.
George, what about yourself?
Yeah, George Bell, Portfolio Manager. So my responsibility, along with Chris, is managing the 10 True Potential portfolios. So involved in that is managing the allocation to each of our active fund managers, Growth Aligned being a great example of that, managing the research process around how we build those key themes as an investment team, monitoring the level of risk which our funds, which our portfolios are taking on an ongoing basis. I work full-time on the solution with Chris to deliver the best risk-adjusted returns possible for our clients. I'm also involved in delivering the message, so working with the fantastic studio team which we have here at True Potential on morning markets, on the podcast, and we also run a weekly webinar with all of our advisors as well.
Excellent, thanks George. And last but not least, Chris?
Last but not least, it's weird going after George actually, because George has basically just taken everything I was going to say. But I'm Chris Leyland. I'm Director of Investment Strategy here at True Potential. I've been at True Potential for around about 6.5 years now, and I work with George, and our primary responsibility, as George said, is running the True Potential portfolios, and we want to deliver clients the best risk-adjusted returns that we can. That really is the key goal of what we're doing here at True Potential.
Okay. And I think really that's, it sets the scene for what we're going to talk about today, reflect a little bit on what's happened 2021, but then really looking forward to the opportunity that there is there for our clients, for markets into 2022. And I suppose when we look back at 2021, there was a lot going on in asset markets over that period, but actually when you take a real step back, it was a good period for asset markets, good performance coming through, even the FTSE 100 managing to get back above its pre-pandemic level, its best performance in 5 years. All of those key discussion points that we've had on morning markets, the podcast, policy changes, direction of interest rates, direction of inflation. We've all talked about used cars quite a lot over the past 12 months. One of those key things that we've been thinking about. But then also just the changes that we've seen in terms of consumer habits as well. Look at retail sales here in the UK, back above the levels of 2019, which is quite impressive when you think about the lockdown that we had at the beginning of 2021 as well. But really those habits have changed as well, and we've seen that playing through in stock markets as well in terms of sector performances and how different areas of markets have performed well. You know, we think about spending habits of consumers ourselves, how they have changed over that period. I suppose, how do each of you think about 2021? How do you reflect on 2021, and what were the key things that you've taken away from it?
I think you summed it up quite well in terms of there was a lot of noise. It was only this time last year we were talking about the riots on Capitol Hill, along with vaccination programs which were just getting underway. We've had a number of political situations in terms of China, developments, rising angst between the US again. But in the background of that, a year of very strong returns. But as you say, dispersion within sectors, which is been fascinating as an active fund manager in terms of the opportunity set which that's brought. And as you say, you saw corporate profits returning to more healthy levels. You saw dividends coming back online, which was again a healthy signal in terms of where corporate balance sheets were sitting. And it was a lot of noise, but a year of opportunity.
And I suppose that's the key word, opportunity. You've used it a few times. Volatility does create opportunity, and that's something from a growth aligned perspective, Paul, that you've been able to take advantage of at times through 2021.
Yeah, absolutely. And I think it gives credit to some of the policy makers, the actions that they enacted in 2020 to really put corporates in a healthy position, households in a healthy position financially, and they've been able to go out and spend on goods. COVID has dominated the lives of 2020 and this last year, but that has not constrained spending on goods and has allowed corporates to carry on doing business, but just in a different manner. And that's created innovation and relied on technology to help facilitate different ways of working, and has created opportunity in the market.
And Chris, from your perspective, 2021, how do you think about it?
I think it's fascinating in some ways in that what you've had, if you look back over history and you were to look at equity market returns for 2021, you've actually had what has been an absolutely stellar year. You've had very, very strong returns, but maybe in some ways personally it's actually felt like quite a tough year. And the reason why it's felt like quite a tough year is because of all the things that George mentioned, Paul mentioned, around the different challenges that we've had. And I think maybe what that signals to me is really around the noise and trying to ignore that noise. And the reality is that underlying companies have done well, and underlying companies is what make up stock markets, what provide equity market returns overall. So for me, there's so much noise that we've seen in 2021, whatever that be, COVID, China, central bank policy, however you want to think about that. But the reality is returns have been fantastic. If we think about the True Potential portfolio proposition, think about, say, the aggressive portfolio, that's up nearly 17% over the year. Now, that's a great return. That's something that I know we're all really, really proud of here. But I think what it shows to me is, and this isn't just for us as portfolio managers, fund managers, I actually think it's for clients as well. It's so important to ignore the noise. It's so important to be invested. It's so important to actually take a step back from everything and understand that actually really strong returns have been made and can continue to be made.
Go ahead, Paul.
No, I think it's important to, if you think about the headlines, and the S&P 500 delivered just short of 30% last year.
Yeah.
and hit new record high, I think, the start of this week. And people think, well, why should I be investing? We've already made excellent returns. But I think we're not just invested in the S&P 500. It's that opportunity set, that broad opportunity set. We're investing not in equities, and we're investing in bonds, alternative assets. Geographically, we're not just investing in the US, we're investing in the UK, emerging markets, sectors. And then you look at the different companies that we can invest in. It's that opportunity set that's really important and to be exposed to. And that really speaks to active management and really what we're delivering. And if you think about what the US has delivered, but what did China deliver last year? It was down 11%. Is that an opportunity as we go into to this year? So I think sometimes that's missed. You see just a headline, but you actually need to think about the broader opportunities.
And I suppose, as you're saying, Chris, it's about cutting away from the noise, focusing on what you firmly believe is your investment principles, the investment philosophy that you employ. And for us, very much speaking to what Paul's talking about there, it's the role of diversification.
Absolutely.
Using different assets at different points in time to create that client journey that's enabled us to deliver those strong returns for clients through 2021. And I suppose that maybe gives us a way to think about 2022. We know that when, as an industry, we seem to for some reason think that everything stopped on the 31st of December and we restart on the 1st. And yes, from a performance perspective, that is definitely the case. But when we look at the economy doesn't stop and doesn't reboot on the 1st of January. So looking forward into 2022, I suppose it's maybe not about making predictions about point estimates of how we think things will evolve, but when we look into 2022, what do we see as the key topics, the key focus points for True Potential, whether it be growth aligned, whether it be the True Potential portfolio solution?
I think for me, the key topics that we debate, the key topics that we discuss, and this is not just internally, it's actually the debates and the discussions that we have with our manager partners as well. And I think they really focus in on a few topics. So I think firstly, COVID, vaccination rates, obviously how COVID is mutating, spreading, but more importantly, how governments are reacting, how individuals are reacting to that overall. And I think what you've seen really with Omicron is in some ways that people are naturally maybe being a little bit more cautious. But the reality is that it's certainly having a much smaller effect compared to, say, the Delta variant, or certainly compared to when COVID first came through. I think for me, secondly, just thinking about the central bank environment, we obviously know that the Federal Reserve, so the US central bank, have guided to stop tapering. At some point they will start to raise interest rates, wherever you feel that may be, maybe June time, maybe a little bit later than that. Obviously, we've seen that in the UK as well. You've actually seen an interest rate rise come through in the UK. So you've seen interest rates go up from 10 basis points to 25 basis points overall. So thinking about how that could potentially change the investment landscape as we move through this year. I think on the other side as well, in some ways, it still feels like we're in recovery. The reality is that economic growth looks to be very, very strong this year, which is great. That's a real positive overall. If you look at the consumer right now, I think the latest figures I got, this would have been a couple of days ago, the consumer in the US is sitting on $2.2 trillion of excess savings compared to pre-pandemic. Now, what does that mean? It means there's pent-up demand there. There's demand, and consumers' own personal balance sheets, if you want to call it that, are very, very healthy right now. So in that sense, to me, that's a real positive. That pent-up demand means the consumer will go out and spend, and that's a good thing. That's good for individual companies. I think finally for me, looking at the outlook for individual companies, it's pretty good. You've seen strong company earnings come through this year. If we look into, last year, if we look through into this year, you've still got generally good earnings growth forecasts coming through. Companies in general, they're not struggling actually a lot of companies are doing fantastically well, and it fits into Paul's point around that diversification and thinking about different companies that will do differently in different environments overall. And that's the beauty of what we do. The fact is we're not just investing in one company, we're investing in lots of different companies, lots of different asset classes. The True Potential portfolios, we use lots of different managers with different styles, different specialisms, different ways of thinking. So for me, overall, I'm pretty positive about this year. I think there's a lot to take away that we think is good.
I think.
I was going to say a lot of that filters into the PMI surveys which we've had coming out over the last week in terms of the manufacturing and the service sector, where a lot of the challenges faced in 2021 in terms of supply chains appear to be getting a little bit easier. That's leading to more favourable outcomes in terms of pricing. There's still consumer demand out there. There's still the appetite from businesses to employ. Against the backdrop in December, the ADP report in the US demonstrated that 807,000 new workers were taken on in the US, which was double what the market was expecting. And on the service side, things still looking robust there. So PMIs is the Purchasing Managers Index, which is forward indicator of or forwards looking survey from supply chain managers, looking at a range of different types of business, a range of different factors, new orders, contract renewals, employment, and I think a lot of that could be encompassed within that indicator, which is painting a positive picture.
I suppose that's the beauty of trying to cut through the noise and look at the data and actually cut back and say, well, here is what we're seeing, this is what it's telling us. And from a TPP perspective, it sounds like you're both pretty positive on the outlook for 2022.
Absolutely. Yeah.
And from a Growth Align perspective, Paul, how does that play into some of the thoughts that you're having there?
Yeah, very much the same. I think what's interesting is you were talking about, the central banks raising interest rates, Bank of England raising interest rates in December. But, if we're going into a tightening cycle, people may think, well, can corporates actually manage to continue to do as well? But it certainly can, because financial conditions continue to be extremely accommodative, and the raising interest rates from a very, very historic low level, just marginally higher. But the overall demand picture from the consumer is extremely healthy, and you're starting to or the expectation is for companies to go out and spend capital expenditure and that cycle to take off, which will help generate more activity within the economy and really gives a positive picture for this year. So I'm certainly positive, and that's why we have a marginal overweight to risk assets and specifically equities within the portfolio.
It's interesting just to listen to the three of you, because the one thing that we haven't mentioned is inflation, which has been a topic of great debate and discussion. And even earlier this week, when we got the minutes from the Fed and their sort of interpretation of where inflation was, but also to your point, George, where employment was going. And I suppose that probably is one of those key discussion topics that we're going to have. We started last year, 2021. Most people thought inflation was temporary. We moved from temporary to transitory, which when we look at the definition is an undefined period of time. So I suppose, how are we thinking about that? What does, I suppose, from two perspectives, does it have implications for portfolios, but also does it have implications for clients, for those that may want to invest at this point in time?
I mean, it's been a key discussion point. It's been a key part of our debate forums, which we have in-house. We talk about it a lot on Morning Markets, and we've been challenging our managers on their views since early in 2021, looking at leading indicators of inflationary expectations. Inflation, presents a challenge to a lot of things, but how do you combat that? You combat that through investing in risk assets. So, as Paul mentioned, within Growth Aligned, within the True Potential portfolios, if we compare our equity allocation relative to an equally weighted model, we've got an overweight there. In terms of our exposure outside of equities, holding products which are less duration sensitive, so less sensitive to moves in yields. That's been an active decision we've been enacting through the portfolios, looking at assets outside of traditional bonds and equities in a rising yield environment, such as alternatives, or parts of the market which we've been looking at and building up our weighting towards throughout the year. So inflation's been a key topic. As you say, Jeff, a lot of the focus in the news has been around this transitory factor, and what we do know is, okay, that's stuck around a little bit longer than many were expecting. You've got base effects within those inflation prints, because we're comparing year on year 2020 with a lockdown economy to 2021, much more vibrant, people out there spending. You had those supply issues in the energy prices which were rising in the background. The good news is when we're speaking to our managers and we are looking at, independent research, you are starting to see month on month some of these factors starting to ease. Used car prices was an example, which we talked about more so the back end of last year. But one of the key aspects towards building up supply capacity is really the vaccination program, not just in the developed world, which is running very well, but in the emerging world as well.
I think that it's an interesting way to think about the dynamic of inflation there. When you talked earlier about the PMIs, and when we look at what we saw this week, we certainly saw the prices paid component starting to come off. So certainly something there when you dig into the data, you get to see that, and something that certainly we as a team will focus on with the managers over the coming months to think about the direction of travel with inflation. How do you then, I suppose, when we look at that in a broader context, that's the market environment that we're talking about, but there's also aspects that are within our control. So we can't control where the market's going, but we can certainly control how we want to take the direction of our portfolios, the managers that we want to work with. So maybe could you bring to life a little bit of those changes that we're going to see within the True Potential portfolios in 2022?
Yeah, absolutely. No, I think we've been doing a huge amount of work on our manager lineup, and what we've got to remember is we always want to try and evolve what we have. We always want to make sure that our manager lineup is the absolute best that it can be. Now, with that in mind, what we've been doing probably the last 18 months is we've been going out to the market itself. We've been speaking to many different fund managers overall. And what we've done is we've gone through a tender process where we are very pleased to say that we will be introducing 4 new managers. So those managers are Pictet, Franklin Templeton. We'll introduce a new strategy from UBS. So obviously that's not a new manager, but it is a new strategy. And then finally from Waverton. So just maybe very, very quickly, just giving sort of 30 seconds on each. So Pictet, hopefully you'll be familiar with Pictet as a firm, but if you're not, it's a Swiss firm. It's a Swiss partnership. Within there, the key thing around the Pictet range of funds, so we'll have 5 funds all through every different risk category. But the key thing there is they use what they call thematic equities. Now, what does that mean? What does thematic mean? What it means is that they look for future sources of growth and they invest in those future sources of growth. But again, what does that mean? What does it look like when you think of it from a portfolio perspective? It tends to have more exposure to areas such as technology overall. And that's exactly what we wanted when we spoke to Pictet and we brought them on board. I think the next manager to think about is Franklin Templeton. So Franklin Templeton's quite differentiated actually. So the way that they think about things is they believe that no one single asset class should completely dominate return. So for me, for George, it's a way for us to further diversification within the True Potential portfolio proposition. And then the last 2, so that's UBS and Waverton, are really around our income solution, so our income portfolios. And what we wanted to do here is really think about 2 things. So firstly, is there a way to increase income? And obviously it's an income portfolio. You want to be able to give the best income that you can, but obviously in a sustainable way. And the second thing is actually to think about the asset allocation of the income portfolios. And what you tend to find is income portfolios are more reliant on UK equities compared to non-income. And there's a good reason for that. It's because the UK market is the highest yielding market when you look overall within different geographies. So what we looked at firstly with UBS is they use what we call a derivative overlay, which probably won't mean very much to you all. But what that does mean is basically they have an ability to offer a higher level of income. So that's a way for us to increase income within the income portfolios. And then secondly, Waverton really focuses around diversification. So Waverton look at income producing equities, income producing bonds, but also income producing alternative assets. And to me, that's really, really interesting because it's a way for us to think about looking at other sources of income overall within the income portfolio. So for me, it's something we're really excited about. Probably the question that, or I hope that you're thinking about if you're watching this at home, is when we'll be introducing them. You're going to start seeing them come through next month, March, and then into April as well. But really, really pleased to be working with what we believe are world-class partners.
Certainly an exciting time to be bringing in new
Yes,
partners
absolutely.
that really feed into.
We've got over 17 billion in the portfolios. You know, we continue to evolve the toolkit which we've got, the active managers which we work with. So it's a great opportunity, and we can't wait to take everybody on board with us on that journey in terms of the communication.
And I suppose that's another thing that we'll be working on over the coming weeks and months as well, to bring together that communication, to really bring it to life for clients, for advisors as well.
Absolutely. I mean, I think, one of the things that I think True Potential does very, very well is communication. And obviously we have various different ways that we communicate with you. Hopefully you watch things such as obviously the podcast, which you're watching right now, morning markets. There's so many different ways that we communicate with clients. But what we want to do is really give you as much information as possible around our new managers. So we're going to be producing written content, video content, and we'll be working with the managers as well, so you can meet them through video virtually. So for me, it's really around providing clients with as much or even maybe a little bit more information than what they need, so they can really become comfortable with the new managers, understand them, and be excited about them. Be excited about the fact that your investment is evolving, that your investment is continuing to be shaped in different ways, in the same way that the market moves in different ways.
It's great that more world-class fund managers on board, active managers. That's going to give you great optionality that's always a challenging market.
Yeah. And from a growth aligned perspective, Paul, what are some of the things that you'll be focusing on as we look into 2022?
Yeah, there's plenty of things that we'll be wanting to look at as always, but the inflation dynamic is going to be key this year in getting that right. Some of the areas that we're thinking about and debating as a team is China, and they've certainly had a challenging 2021 with some of the regulatory pressures that's impacted the property sector, education as well, and trying to understand whether the government is going to make the environment more favourable for companies in that area. There's delistings from the US that's making investors nervous, but long term there could be great opportunities there, and certainly the performance of last year means that valuations are certainly more attractive. So getting that right this year could be a key difference when it comes to performance.
And I suppose that's one of the topics as well we can explore with the world-class managers that we work, given the access that provides us to their research resources, the people on the ground in those individual countries that can be really beneficial to that research process and really additive to it.
Yeah.
And George, from your perspective, just what are you thinking about from TPP for 2022?
So new managers is a fantastic opportunity. Continuing to build on our communications around sustainability. So we've published the document which brings out our approach of being a firm and a fund manager which is sustainably aware, how we score our managers in that way, and just providing context in terms of the way each of our fund managers think, how they operate, and what that means when you bring it together at a portfolio level. So there's a lot of work on the table, a lot to be getting on with, but you know, a lot of groundwork has been put in ready for this year, and we're really excited about the opportunity.
I think that's the key thing for us all. We're really excited about the opportunity that there is in 2022.
Yeah.
The challenges that the market will always present, because that's just what it does.
Yeah.
But also those things that we can control ourselves.
Yeah.
The sustainability discussion that you're alluding to there, George. The new managers coming in, which is a really exciting change for the proposition that we haven't seen for a number of years. So it's great to be able to bring that through. And I suppose is one of the key things. We're all passionate about what we do. We're passionate about investment. And maybe for our viewers, it's probably interesting to know, how did we all get into the industry? How can they get into the industry if they want to come here and sit and do one of these podcasts? But you, George, how did you start in investment?
So I'm a local lad. You can probably tell by the accent. I studied at a local university, finance and investment management. Essentially, within my program, I spent a lot of time working with financial advisors during the end of semester, during summer periods, and so on. In my course, I was looking for a third-year placement between my third and final year. Essentially, I met a guy called Nick Gibson and a chap called Nick Redfern at a graduate recruitment fair, which I spoke to them about the company. I was looking for a placement. It was a new concept at the time, but I convinced them to let me come in and have a conversation with them, where I met David Harrison, and great introduction, and managed to convince him that a placement was a good idea. So he let me come on. I worked in various different departments throughout the business for 1 year, from platform to operations to the sales and distribution side. It was great way of understanding the business, of getting to know what people do. At the time, I knew everybody's name in the office. There was only about 100 people. There's over 400 of us now, so I've lost track a little bit there. But I went back to my final year. I agreed some terms with Mark Henderson before I finished placement, that I could come back if I hit a certain grade threshold. So thankfully I pushed on and beat those grades which he put down on paper. So rejoined True Potential back in 2016 after killing a few brain cells travelling around Southeast Asia for a few months. Came back to the fund governance unit within True Potential, where I worked with a fantastic team which is part of the investment department. We were involved in the launch of a number of funds: the UBS fund range, the Goldman Sachs fund range, Growth Aligned, Global Managed. So at the time I was working in operations, but very closely with Chris in the investment unit. And then Chris poached me from that team, and I worked alongside Chris as an investment analyst, which I thoroughly enjoyed for a number of years. And then the natural progression, working more closely with Chris, was to move into the portfolio management role.
It's also, I suppose, interesting to maybe explore that a bit more in terms of that relationship with the university, from a placement perspective, and something we as a business are really keen to push on with, and something that we use within the investment management team as well.
we not just in the investment management team, we've got a number of recruits from local universities within the investment management team, and will continue, but it's opened a number of doors for the rest of the business. So it's great to see more people coming on from that particular program, but the wider university as well, into True Potential.
And I suppose it's very much linked to True Potential's ethos as well, about how we want to use the community resources that are around us, use that talent and bring that talent in to deliver for the business, but to deliver for our clients as well.
Bringing that opportunity. I mean, social mobility was part of the culture before we were using the term social mobility. And it's something which development, training, qualifications, it's something which True Potential are a huge supporter of.
I think it's important though, to get into the investment or financial services, you don't necessarily need to have a degree. That is probably the more traditional way, but there are other ways of approaching, of getting into the industry and educating yourselves. And there's different ways you can educate yourselves away from a degree. You can do professional qualifications that are often a lot more relevant to the job that you're looking to get into. You can, if I was wanting to get into portfolio management, I could create a demo model portfolio myself at home and construct a portfolio and think about how would I do that? What are the inputs? What's going to be relevant? What do I need to read up on to allow me to get that experience that is difficult to get unless you're employed? It's that kind of catch-22. So I think it's important that anywhere is accessible, as long as you've got the right mentality of working hard, getting on with people. I think is absolutely critical. For myself, joining True Potential, it was a friend who introduced me to the business, but at the time there was no investment department, so I joined the platform team. But I was aware that they had a strategy fund range that I found actually quite interesting and wanted to be part of. So it was about, there was no job at the time, but getting in contact with a senior partner saying, this is what I'm really interested in, I want to learn more about it. And everybody needs a bit of luck in life. Unfortunately, I was given that opportunity to learn more about the strategy funds and become an analyst. So I think there's different routes, it's just having that mindset.
Yeah, and I suppose that's the thing, there isn't one route.
Yeah.
The routes that everybody takes, that we've all taken, have been very different, but I think it's that crucial point of being open-minded to thinking about how you challenge yourself to do that, being open to different avenues of getting that exposure.
Yeah.
Chris, yourself, what about you? What would you say to that budding person out there that wants to be part of an investment management team?
I'd say, look, I think the first thing that I really want to see if someone comes to see me and says I want a job is I want to see that they're interested and they're interested in investment. And I think the way to do that is maybe some of the things that Paul was talking about, but even maybe more simplistic than that. Read the business pages of a newspaper. It doesn't need to be the Financial Times. It be another newspaper, the Times, something like that. Watch the news on TV. Watch the business part of the news. Again, just try and build your knowledge up around very, very simple concepts that are happening. And then if you can then get that across to the person who's interviewing you, I think that's really, really strong. I agree with Paul, certainly from the way that I came into the industry was very, very traditional way. I did a degree in economics and maths, so probably couldn't be a more traditional way of coming into the industry of doing that. But I do think there's lots of other opportunities there. I think there's an ability to actually start work at 18. I think a lot of people can do that. They can then do a professional qualification and actually potentially you've got no debt. In fact, you're actually in a better situation because you're actually earning money. Yeah. And actually you're probably in a better situation anyway because you're actually learning on the job and you're potentially doing some sort of professional qualification there as well. So I do think there's lots of different avenues, but for me, I think the key things are you've got to be interested, you've got to be able to demonstrate that. I think more simplistic things, and this is for any kind of job, be hardworking, be likable. If you come in and you can get on with the people that are interviewing you, you're kind of more than halfway there. Yeah. So for me, I think the key is really, you've got to work at it. The reality is the more work that you put in, the more you'll get out of it overall. And I suppose that's like everything.
Yeah, and I suppose the thing that overrides that is to be passionate about the topic.
Yeah, that's the big thing.
If you're passionate about what it is that you're doing, actually, that goes a long way. A bit like, we've talked passionately about what 2022 is going to bring for True Potential, it's going to bring for the portfolios, etc. I suppose the other thing that maybe to start and wrap it up is to think about, well, what are we going to do individually in 2022? Perfect time for New Year's resolutions, things to think about. Anybody got anything that they want to share with us today?
Everyone seems to be looking at me, don't they? What New Year's resolution do I have? I want to lose a bit of weight, which is a pretty standard New Year's resolution. I lost quite a bit of weight last year, so that continuation I think could be good. I want to buy a house as well. Obviously, again, that's a very positive New Year's resolution. I've got other resolutions as well, but I'm going to keep them to myself. I think I told the group before
they do sound quite intriguing, and we'll maybe find a way over time to bring those to life.
Maybe in later podcasts, if I've managed to achieve them, then what I could do is I could bring them into the podcast, and it'll make for a really exciting podcast.
I've got a friend who's a really keen runner, and I said I'll join him on a few different events this year. But I'm conscious of saying that after Greg Lang's achievement last year. I'm not going to
1,600 miles.
I'm not going to set any bars in that case, but yeah, I've got a few half marathons and things like that, which I'm looking to do.
For me, very, very boring. Go to the gym more, which I've yet to go to the gym. And then as a Yorkshireman, save more. So I'll be putting more money under the mattress. I've got
or into the GP portfolios.
All that, given the inflation backdrop. But I've got a 5-year plan of what I want to achieve to get me up the property ladder. So kind of worked out exactly what I'm spending, what can I put away.
Yeah. That's a analyst fashion. Will be a spreadsheet.
Yes,
that works
of course,
through all of that.
I've got it all mapped out.
I was going to say, that's a proper New Year's plan, isn't it?
Well, no, you've got to have them.
Yeah.
Well, there we go. We've got, for myself,
you can't get away with
it. So last year I didn't get as much cycling as I wanted, so this year a lot more cycling. So already managed 5 days. Well, if I get today done, that'll be 5 days of cycling this year already. So I'm trying to get the miles in. Doing it for charity first, so doing it for the Doddy Weir MND charity initially. So going to keep doing that and try and get a few more miles under the belt this year.
Is that outside or on the turbo?
No, on the turbo at the minute. Too dark, too icy, too slippy at the moment. Yeah. But we'll leave it there for today. Thank you for joining us. Hopefully that's given you a good introduction as to how we as an investment team are thinking about 2022, the real opportunities that we see, both from a market perspective, but much more importantly, what we see from a true potential portfolio perspective. New partners to work with, new opportunities to deliver for you, our clients. And please also remember to join us again next week for the 100th episode of Do More With Your Money podcast. Many thanks.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.